All right. With everything going on with the coronavirus. Hold on. Kobe. Rest in peace, Mamba. Anyway, so with everything going on with the coronavirus stuff and the stock market crashing, I feel like I've been getting a lot of just random questions from people. I'm not professional or anything, but people just ask me a lot of questions because I do invest in stocks, and so sometimes it's hard for me to realize that people have no clue what a stock is, what the stock market is, what anything means. Because I've been doing it so long, and I'm like, don't everybody follow the stock market? No, they don't. Um, so a lot of times, the biggest thing is when people talk about the stock market, they're talking about something that's called the Dow Jones Industrial Average, and basically that's just an index. Index meaning just multiple funds or multiple stocks per se that are a, I guess, kind of statistical representation of how the economy is moving or the overall market is moving. But it's only 30 stocks, so it's thousands of stocks in the market. But that's one of the biggest indexes to kind of see how everything else is moving. But it is comprised of multiple stocks. Another one is the S&P 500, stands for Standards and Poor's. So it's the top 500 companies that they've rated in the market, and that's probably more of an accurate trend of how the stock market is doing versus the Dow Jones. But people use both. I mostly just look at the Dow Jones, but a lot of people look at the S&P 500. But the S&P 500 has a lower value in a sense than the Dow Jones. Dow Jones usually trades right now around about $22,000 if you wanted to get in that index. But if you want to get into the S&P 500 index, I think it's about $2,300, something of that nature. But that's what people mean by when they say the stock market. But a stock in general is just a piece of ownership of a company where you pay a couple dollars, a couple $100, you even pay cents for literally a portion of ownership of a company. Companies like to raise money to either invest in new businesses or a new technology, expand anything that a company tries to do to make money for the most part. And you're technically an owner. If you own $3, you're part owner. Um, but the biggest thing is is what a lot of people want is that stock that rise in value, right? And this is where it gets tricky, right? So we understand what a stock is, but the tricky part is figuring out if you got a stock at a good price. So there's typically two ways to go about evaluating a stock, right? It's called fundamental analysis and technical analysis. Fundamental analysis mostly just deals with the brick and mortar of the company. It's just if it's profitable. Um, it's got new business coming up. It's new deals coming in the future. How much debt do they have? What's their history? Do they have good management? Things of that nature. Things where if you started your own business, the things you would think about, right? The day in, the operating expenses, everything, right? The technical analysis, that's something more so of the psychology of buying and selling goods, right? And me personally, I believe that the stock market mostly follows technical analysis typically on the short term, but on a long term, fundamentally sound companies do the best. For example, right now, coronavirus, right? Before like any company went out of business or started laying off workers, the stock market started crashing. Had nothing to do with how much money the company was making. Their deals were probably still in place with another company, and the value dropped. Right? because supply and demand. If a lot of people are selling, that means the demand is going down. A lot of people buying, demand is going up. So that doesn't necessarily mean that the company is still making money. For example, me. I've been waiting for this opportunity because I thought about this for years, I guess. Because lately the stock market's been on just a high trend. Everyone's buying, everything's going good. Coronavirus come, everything's done, right? But companies are still there. You know what I'm saying? Like they're still doing things, selling stuff to people. But the fear of what's going to happen to the coronavirus basically causes a lot of people to want to liquidate their assets out of fear. It's like, okay, if I have like $100,000 in the stock market or things of that nature, it's like, okay, if you don't know when your next check is coming, okay, I'm going to sell this stuff off because I value my security over long term, at least in the moment, right? We're short term thinking creatures. That's just the shit we do. But that's typically not the best play. More so because of this thing called dollar cost averaging. Hopefully I'm not losing anybody because it might be a little bit more advanced. But time in the market is far more better than timing the market, meaning basically that just buying consistently over time in the history of the stock market has produced better results than trying to wait till it goes low and then goes back up. Because a lot of people are like, oh, is this the bottom? Or what if it never comes back? I mean, the only thing we can call off is history. Sure, the stock market might not ever come back. But that's kind of like saying, hey, who knows if we might eat tomorrow? Sure, we have food today, but I guess it doesn't necessarily mean we're going to have food tomorrow. Unless you one of those hoarders or whatever. Stole all the food and the toilet paper. It's crazy. Anyway, off subject. Um, but history is the best guide. And the stock market has went through so many crashes. So many. This happens all the time. And people panic and sell out of fear. And this is the best time for people like me. I just save my cash and it's like, oh, everyone's selling, everyone's panicking. Hello, how are you doing? Let me get that Disney for cheap. Let me get that Shopify for cheap. I'll take it at a discounted price. So that's the basics. Buy low, sell high. This is one of the best times to get in because of everyone panicking and demand has went down. I get it. Everyone isn't fortunate. Everyone may not be able to buy stocks at this particular moment, but I think this is the best time at least to try to get your feet wet. At least get the emotional experience, because that's the biggest thing. The emotions are more important than anything else. Because you can think all fundamental that you want to, but we're just emotional creatures. Shit started going wrong, we start panicking, we freak out, we sell. Oh, everyone else selling, time to sell. Long term, that's not really the best play, because that's where the dollar cost averaging come in, basically. So if you put in, just say for example, I bought Disney, right? When Disney, I guess the last time I looked at Disney, it was like $140, $150, right? Then it went down to like $95. Okay, so I bought like 10 shares of Disney at $95. No big deal, right? And then it started going lower, right? So I bought it at 90. Because in my mind, nothing has changed about Disney. Disney is still, everyone's gonna go to Disney World once it reopens. Everyone's gonna go back to Disneyland. They came out with Disney Plus. That is clutch. Man, I love The Lion King. I watch that shit all the time. Fucking Mufasa. Anyway, so I got Disney. Went down some more to 80. So I'm like, I'm buying. I don't know how many. I got like 40, about 40 shares, 41 shares. About like 21 more shares at $40. So basically, the average between all that, based off my Robinhood app, was like $88. And so now all the stimulus package come in. Everyone's getting tired of fucking staying at home for coronavirus stuff. So they're like, all right, we'll buy back in. So people are like, okay, yeah, let's get back in the market, right? This might be good. And then just sideline investors are jumping in as well. So that's increasing the demand. So I think Disney is like $105 now. So like from Disney alone, I made like $800, I think, over the course of like 3 days. Um, but of course, that's subject to go down and up, down and up. But long term play, Disney's gonna be fine. So everything was given to me at a discounted price. I bought a little Tesla. I bought some. What's that about Shopify, Zanga, multiple companies I bought. More of a speculation type deal. I did more of a fundamental analysis for Disney. So I basically just bought that at a discount. But a lot of other companies, I'm thinking more so of maybe short-term play. That's typically not the best way to go. The best way to go is typically is mutual funds. We'll talk about that another time. But that's that's kind of what I'm doing right now, right? This is kind of impromptu video, just about investing in general. But don't be scared. Get in the market and use my Robinhood link. We'll both get free stock.